stakeholders in India's growth. And the rise of the AIF ecosystem from a modest 0.2 trillion in FY16 to more than 6 trillion today marks another shift. Risk capital is flowing into startups, early stage ventures, and new economy businesses at a scale that was unimaginable even a decade ago. These are not isolated developments. They are interconnected signs of a maturing financial system. The evolution of our markets did not happen by itself. It has been rooted in a steady reform agenda, not dramatic overhauls, but thoughtful, calibrated, and persistent improvements. One of our key priorities over the last few years has been simplifying market processes so that every stakeholder, issuer, investor, or intermediaries interacts with the market smoothly. For example, the digitization of onboarding and the establishment of a unified authenticated KYC framework in securities market through KYC registration agencies, which we call KRAs, have reduced duplication and made access more seamless. These are changes that save time and reduce compliance burdens, especially for small investors and new entrants. Going forward, the proposed CKR-CY 2.0 with deduplication and authentication and interoperability with KRAs will provide a seamless KYC for the entire financial sector. We must also enable, with technological and regulatory changes, KYC and DMAT account opening for NRIs at their locations abroad without the necessity of their presence in India. For FPIs, we propose to shorten the registration process to just a few days by not only streamlining processes, but also by persuading FPIs for submission of digitally signed documents. A new website is now functional for providing information about India investing by FPIs at one place. For common application form, the front-end interface has been recently improved and more work on this is in progress. Reforms in block deal framework will help meet a long-pending demand from investors. Similarly, the introduction of the common contract note with a single VWAP for institutional trades may seem like a small operational reform, but it enhances clarity in institutional transactions, improves audit processes, and reduces discrepancies, all building blocks of trust. We are also close to enabling closing auction mechanism in our market after having widely consulted on the matter. We have also undertaken important steps to improve the experience of issuers. The rationalization of minimum public offer scale-based thresholds that allows companies with substantial market value to achieve public float requirements through a gradual, orderly process instead of rushing to dilute ownership. Enabling founders to retain certain ESOPs post-listing measures that the alignment of incentives remains intact while at the same time maintaining transparency and fairness. Similarly, expanding the scope of electronic book provider platforms to include REITs and InvITs has strengthened price discovery in these fast-growing market segments, which are now playing a central role in financing India's infrastructure. And by lowering the threshold for mandatory electronic book mechanism usage in bond issuances, we have improved transparency in price formation in the corporate debt market. A market can deepen only when both supply, whether it's new equity, debt, and other issuances, and demand, which is the investment by investors, evolve in a balanced manner. In recent years, efforts have been made to expand participation from smaller towns and underserved segments. Revised distributor incentive structures now encourage onboarding of first-time investors from B30 cities and aim to increase women investors in the mutual fund industry. This is not just market development, it's financial inclusion of a profound kind. But the investor inclusion is meaningful only when it is accompanied by trust in the system. For this reason, we have introduced reforms that are increasingly focused on transparency in disclosures, accountability, and prompt identification and mitigation of risks. On governance of market infrastructure institutions, exchanges, clearing corporations, and depositories, well, these are the foundation elements of the securities ecosystem. Their governance must be unimpeachable. To strengthen governance of MIIs, we have mandated that in addition to internal evaluation, the performance evaluation of MIIs and its statutory committees would be done through an external independent agency once in 3 years. For improving board governance of MIIs, new guidelines have been issued for appointment of key directors. In derivatives market, after wide public consultations, we have taken a number of measures in October 24 and May 25. These measures have been rolled out in a graded manner as per an implementation roadmap. We'll continue to monitor the data and the market. SME platforms have opened new avenues for smaller enterprises to raise capital, but the integrity of these platforms must remain high. Enhanced scrutiny and stronger governance norms for SME issuers are designed to ensure that the platform remains credible, protects investors, and fulfills its objective of nurturing growth enterprises. Looking ahead, our agenda is not about adding more rules. It's about shaping a smarter rule book, one that is simpler to understand, proportionate to the risks it seeks to address, and supportive of innovation. A comprehensive review of SEBI's regulations is underway after due public consultations, an exercise intended to eliminate redundancy, remove ambiguity, and update outdated constructs. The process is well advanced for SEBI stockbroker regulations and SEBI mutual fund regulations. For settlement and LODR regulations also, the preparatory work has started and public consultations will follow. The goal is clear: a regulatory architecture that is contextual to our present and future needs, unambiguous, easier to comply with, and more effective to supervise. To ease the process of fundraising for IPO-bound companies whose pre-IPO shares are pledged is being streamlined, we are proposing a new framework which will ensure that lock-in requirements get automatically enforced even if the pledge is invoked or released, thereby preventing listing delays. We are also proposing to rationalize the existing contents of the offer document summary. This summary will also be made available separately to investors from the offer document to reduce their reliance on unverified social media or gray market tips and encourage informed feedback from them. With the introduction of the offer document summary, the requirements of abridged prospectus will be dispensed with, reducing the compliance requirements of the issuers. Regulation can guide, enable, and correct, but true market quality emerges from the conduct of its participants. Institutions must lead, boards must pursue higher governance standards, intermediaries must embrace excellence beyond compliance, and market participants must operationalize integrity in daily practice. I urge corporates, fund managers, and market participants to adopt best practices proactively, to invest in capacity building, whether in cyber risk, data ethics, or behavioral governance, and to treat transparency as a strategic advantage. To conclude, the securities market is no longer a passive mirror of the economy. It's an active partner in national building. The numbers I shared are the outcome of collective effort. The reforms underway are the roadmap. But the future, we realize, will be determined by the depth of our partnerships between regulators and industry, issuers and investors, urban capital markets, and emerging savers in smaller towns. Let's therefore commit as regulators, industry leaders, and citizens to shape markets that are deep, inclusive, and globally competitive, markets that allocate capital efficiently, protect the small investor, and fuel a growth story that is sustainable and shared by all. Thank you.
Yes, Chenmay, you're threatening me with the mic, please.
Firstly, I must make a confession. I like the SEBI chairman. I like him because he didn't embarrass me when he could. And I'll explain. I had been writing ceaseless articles on why in the Indian banking sector, the government should be the single largest owner, but below 51%. And he was DPM secretary, and every time, people would say, why is this not happening? Then we were on a panel together and we were sitting in that speaker's lounge, and he came and told me, you must stop writing these articles. So, because it's not that I disagree, it is the Supreme Court has said that if the government is the single largest owner, we will treat them like public sector. Now, it requires a great degree of decency to have somebody keep writing articles repetitively and say nothing. Then we went on to the panel. He gave his speech, said nothing. And I felt so awkward that I had to publicly make this confession which I make today. So I have to confess that I like you. And it's also a very rare quality when you can rub somebody's nose, then you don't do it. So, my nose is intact, as you can see. I would like to ask you a couple of simple questions, actually. Of the priorities that you highlighted, what are the 2 or 3 most pressing for you? And also, what keeps you up at night?
I think I'll answer the second question first. Nothing keeps me up at night because that is useless because you have the whole day to do a lot of work and the next day will be gone. Another shift. Risk capital is flowing into startups, early stage ventures, and new Mumbai. I find, there is huge amount of talent, both internally within SEBI and externally outside. And we just have to work together to make the magic happen. So I think it is like the moment we really take our blinkers off, things start happening.
Now, I'm going to ask you the final question before, should we go to the floor or no? Okay, so I know you've got a time constraint, but I will ask you that right now there is a lot of froth in the US market, which can have implications if it comes down. If the US market was to correct, 21% of US households have investments in the market. And depending on what range you take, there could be a 6 to 10% wealth effect, which might have a compression on the US economy and on the global economy. In a situation like that, do you think there will be panic and money will go out of India or come into India?
I think if you would have seen the trends over a period of time, uh, we really see the rise of domestic investor in a big way. Now, individuals itself, they hold, more than 17, 18% of the listed markets. We do have DIIs and individuals put together. Now, FPIs are actually under 17%. So one is that this process, which is the more, 135 million investors, unique investors, that institutional investor, the mutual fund industry. This is the industry which believes in India's story, because India's story is not really built on any bubble. You have a very strong economic growth which is happening, and there is a demographic dividend, there is a talent pool. uh, we Government is investing in infrastructure, and private sector is investing too in different things, and I think more needs to be done by possibly the private sector. So going forward, this growth is the main reason how we would be able to deploy our internal savings and more savings into our capital market. There will always be risks, and there have always been risks to external risks. Is it whether it is trade related or whether coming out of the stock markets or the financial markets. But I think whether it is RBI or SEBI, we have been working together always, and we have a fair amount of models on interconnectedness and how it happens when you have redemptions, what happens when there is a very, so mutual funds have to do, for example, stress testing, and have to publish those results on public basis as per our guidelines. So these are the things that we have built up over time. I would not like to comment on what is going to happen in US market, because the jury is still out in terms of whether it is overvalued or undervalued in the current context, and different commentators have their different views. But be that as it may, I can say that internally we have to really look at our own economy, the fundamentals, the reforms, the ease of doing business, the capital growth, the investments, and sustain this growth. And that when that happens, which is also propelled by the trust of the investors into this market, I think that will really be the shields against the certain shocks that might come.
Thanks, Chenmai. And Chair, one of the things that you have been really focused upon is, technology, and today with a whole lot of rapid adoption of AI, tokenization, algorithm systems across the global markets. What's your thinking about a regulatory sort of a based or a market infrastructure framework uh, that would support innovation more, and while safeguarding, of course, stability, which is so very critical, and of course, of also investor confidence?
So our motto has been, our regulatory stance has been innovation with responsibility, innovation with accountability. So therefore, innovation is unstoppable, and I think we will be foolish if we don't promote innovation. Innovation is, particularly the young talent that we have, is brimming with ideas. In order to do that, we have to in fact do more in terms of R&D, and then we can always have responsibility attached to it, the accountability attached to it. And there lies our not only that means we need to be very dynamic, we need not be static, and we have to move with technology, and we should put and interact and put together the best of the minds in order to see how those risks would not spill over to us. So de-risking while still providing innovation has to be the thing, and it's not an easy thing to do, but we must make commensurate efforts to do that.
In the earlier sessions, and always whenever we have sessions of this kind, is reference, of course, and obviously to the gift city as the financial hub. And what more do you see that's critical in terms of reforms or enablers that you see that would be needed or forthcoming to scale gift city into something which will be really meaningful in terms of the global capital flows?
I think that will not be wise on my part to comment on a fellow regulator. There is a regulator there. So I would be more inclined towards, to the extent we can facilitate it, we are facilitating. But I think as a domestic market regulator, for us, it's very important that our markets remain, to the best of the standards in the world.
Right. Janmai?
I have to looking at the audience, I restrained myself on a loose comment I was about to make on the gift city and in liquidity needed, but I won't go there. And the final question that I will ask you is, in the next 3 years or 5 years, what will you look at that will make you happy about the role that SEBI will play?
We are looking at double the numbers of the investors. So I think that is more than populations of several countries put together. I mean, if we add another 100 million investors, and that's our survey shows, that when we have the very large survey that we have conducted for the first time, shows that 63% of investors are aware of the securities market. Only 9.5% of the households are yet invested. And 22% of the households are looking at investing in the securities market in some way or the other in the next 12 months, which means a very big responsibility on all of us. I would say both regulator as well as the industry participants, and as also the issuers, because so that we need good quality papers, people forming companies, investing companies, building companies to scale, bringing them to the public market, private market, private credit, getting into the private listed space, and then that listed space, listed companies coming to the public markets is a continuum. We need to lots of activity of diversified nature with diversified risk to have these investors who are intending to come. That's one part. The second is the educating investors, and how do they come in safely, responsibly, and they don't deal with, I mean, they don't get defrauded by because when we have speed of digital infrastructure, we also have a speed of siphoning of money through cyber frauds. So this particular responsibility is the one where, if we are able to discharge well in the next 3 to 5 years, obviously our capital market will be obviously of a different level in next 5 years.
Wonderful. So I'd like to bring this session to an end with a new dictum that the SEBI chief has given us, which I love, the IRA of the future, which is innovation with responsibility and accountability. Thank you so much.
Thank you so much, sir. Thank you very much. May we request our moderators, CB and Dr. Sinha, to kindly hand over a little memento to SEBI chair, please.
Ladies and gentlemen, we break for lunch and we congregate here again at 2 p.m. शुभ सबसे आगे अब लड़कियों में शुरू हुई लड़कियों का नाम सबसे आगे है और हमारे लड़कियों के नंबर सबसे ज्यादा ही आगे हैं अब मास्टर्स के विदेश वाले ज्यादा पहली लड़कियां
ट्रांसफर करें हेलो 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 कैमरा पीछे नहीं
diverse agenda going on.
So, Chairman sir, the high-powered committee was also expected to meet, and one of the points of discussion was approval for NSE's NOC for the IPO. Has that happened? And if you could help us understand, is there any pending issue that you need to see before you sort of consider that approval, or all issues have been ironed out and it's just the meeting which is left to consider?
You will know when the NOC is issued. Yeah.
सर दो सवाल ये पूछना चाहेंगे सर अभी देश के एक एक्सचेंज में आशीष चौहान जी ने आपसे कहा कि वॉल्यूम्स को मेजर करने का तरीका जो है उसमें थोड़ा बदलाव आना चाहिए और हमने सीईए का भी एक सर कमेंट सुना जिसमें उन्होंने कहा कि आईपीओ आजकल फंड रेजिंग के लिए कम होते हैं पीई एग्जिट के लिए ज्यादा होते हैं आप क्या कहेंगे
पहले इशू पे तो मैं ये कहूँगा कि उस पे ही सेबी ने जो नियम बदलाव किए थे उसमें मैट्रिक्स को भी चेंज किया था कि ओपन इंटरेस्ट जो पहले था उसको हम डेल्टा लाए हैं तो वो डेल्टा से वेटेड है और वो बात कर रहे थे कि प्रीमियम वर्सेस ओपन इंटरेस्ट की और दूसरे प्रश्न का जवाब ये है कि आईपीओ में एग्जिट भी होता है और रेज भी होते पैसा रेज भी करते हैं वो कंसर्न आईपीओ के बारे में निर्भर है हमारे मत में बहुत सारी कंपनियां पहले पैसे से बन जाती हैं और जब विकसित हो जाती हैं यदि वो आती हैं तो उसमें कुछ लोग एग्जिट भी करेंगे क्योंकि वो कंपनी पहले ही बन चुकी है और कुछ ऐसी भी कंपनियां हो सकती हैं जो कि ग्रीन फील्ड में आए और वो पैसा रेज करके आगे बढ़े वो दूसरी तरह के आईपीओ होते हैं हमारे दृष्टि से सब तरह के वैरायटीज कैपिटल मार्केट में और सब तरह की संभावनाएं कैपिटल मार्केट में रहनी चाहिए
Chairman sir, one final question sir. Sir,
Excuse me now.